Let's now delve further into Absa's expansion plans. We're joined by James Agin. He's the Managing Executive in Corporate Investment Banking at Absa, and he joins us now here in the studio. Great to have you with us today in the studio, sir.
Thank you.
Now, I just want to start off with something they mentioned earlier. Absa, of course, is one of Africa's largest banking and financial institutions. But I guess would like to get more insight into what exactly you plan to do with this. You call it a new non-banking subsidiary in Beijing. What exactly then is your plan there?
Yeah. No, and thank you very much for that. So for us as a leading Pan-African bank, part of our business strategy is to enable global trade with the global continent and Africa at large. So as you know, China being one of the leading trading partners for Africa, we felt it was really, really important to plant capabilities that have deep knowledge of Africa to help the Chinese businesses that want to invest into the African continent get advice from experts who can then guide them into their entry and building their trade capabilities within the African continent. So for us, it's a really critical investment that we've made, and the whole purpose of that is to develop the trade between China and Africa facilitated by Absa.
But I guess to get more of a sense of how exactly you plan to do that. I mean, you talked about advisory services. Yes. That's what you plan to provide. But for example, we've seen quite a number of countries in Africa, for example, investing in China's debt markets with the Panda bond, for example, with Egypt. So I guess I would like to get more of a sense of what you're keen on doing. Are you keen on sort of encouraging capital flows to China or from China to Africa? Are you keen on maybe directing some Chinese investors to Africa's markets?
Absolutely. And critical to that is directing Chinese investors into Africa.
Right.
I mean, we've seen the big role that Chinese investors have played in infrastructure, in trade, in manufacturing, and critical for us will be those two critical components you mentioned: capital flows. Can we access the Chinese debt capital markets to get a diverse source of liquidity into the African continent with different dynamics from a currency perspective and interest rate perspective, and just the shifts in the global dynamics of interest rates and et cetera as those come through. But secondly, what's really, really important is the investments that are seeking for opportunities in the African continent. For us is to showcase those opportunities to Chinese investors and guide them on how to then land those investments in the African continent. So for us, those are two critical parts that we're looking to facilitate, and therefore very, very keen, and having those colleagues will be present in China to actually be the first point of contact and then lead those investments into the African continent.
Is there a longer term goal you have with this non-banking subsidiary? Could we see you move maybe into China's financial ecosystem?
Well, at current state, as we know, the Chinese financial sector is very, very deep and very, very well established.
Right.
And currently what we're looking to achieve is actually to stimulate the trade flows from China into Africa. As we say in our purpose, empowering Africa's tomorrow together, one story at a time, really want to build those stories as it were. So for now, our key purpose is just to focus in advising those flows and giving more impetus for the Chinese investment opportunities to find a gateway to bring them into the African continent. For at the immediate term, that's our main purpose that we're looking to achieve out of this investment.
And I'd like to get your sense or your view on what the trade finance is right now between Africa and China, because we always talk about how the trade finance gap is for African businesses. According to the AFDB and Afrexim Bank, it was estimated at around $81 billion in 2019. So with respect to trade with China going forward, how big is that trade finance gap? How do you plan to sort of change that?
Yeah, and that's an important point, because that trade finance quantum has currently grown to $235 billion, but it is still heavily imbalanced. So, trade, that's coming China into Africa, about 190 billion. Vice versa is 91, and it grew China into Africa and Africa into China reduced. Now, for us, it's really, really critical to assist in building and bridging that gap by one, also facilitating opportunities for African exports into the Chinese market, but most importantly, not just bringing in trade in terms of finished goods, but also encouraging investments in areas like manufacturing that will help kind of reduce that deficit that we're currently seeing, which is quite large as per those numbers are. But what we're quite happy about that the overall size is growing, and so that's a good thing. But yes, we really have a role to play in ensuring that that deficit actually reduces.
Right, quite a Herculean task. And any insights into your strategy for that?
Well, our strategy around that is, of course, really driving the manufacturing activities, and not just trade, but manufacturing. So today, you can find previously, whereas people were going to say, for example, buy tiles from China, now we've got the Chinese companies manufacturing the tiles in Kenya. That for us is a big progress from that perspective, in that there's value addition taking place in the country. There are people being employed, there are raw materials being bought in the country, and for me, that is the kind of progress we want to see coming place out of the interactions we have between China and the African continent at large.
Right.
Yes.
Well, thank you so much, Mr. Agin, for joining us, giving us more insight there.
No,
hopefully, we'll follow that story and get more updates as you build in China. That, of course, is Mr. James Agin. He's the Managing Executive in Corporate Investment Banking at, of course, Absa.